Hi everyone, let's go over my low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with the low time frame first scenario that I have, where this is a finished impulsive structure in either a wave 1 or a wave C. Now the probabilities currently as it stands because of this range are on the side of a potential wave 1. Then we're looking at a 3-wave structure in a wave 2 for then continuation to the upside in a wave 3. Because if this is the high of a C wave, we want to see continuation to the downside pretty sharp, because then we're expecting lows lower than the low of B over here at 24k. Now if we are looking at this particular scenario, the most common targets for a wave 2 are between the 0.5 and the 0.786 Fibonacci, taken from the low to the high of a wave 1, currently sitting in between 28k and 26.2k. A rare target for a wave 2 is the 382, and a very rare target only in extreme bullish markets is the 0.236. As it stands now, price hit the 0.236 for at least a little bit of a bounce. The vertical lines that you see on the chart are Fib times, also taken from the low of 1 to the high of 1, to compare the length of this wave 1 with the length of wave 2. Now corrections can be longer than the impulse, that's absolutely fine, with the 1-to-1 of the impulse sitting here, which we almost reach. So during this weekend we are going to pass this 1-to-1, and as it stands now, the low that has been made over here has been made in between the 0.618 and the 1-to-1 Fib time, which is fine for a wave 2. However, just remember the 0.236 is an extremely rare target for a wave 2, and preferably you want to see a little bit of a move towards the downside, because the 382 is a less rare target, and these of course are then the common targets. And if we look at the support areas to the downside, the 382 does have nice confluence with this target box that I have, the support area between 29k and 28.8k, and then the second box all the way to the downside is at the 786, which has support then around 26.5k to 26.2k. Finally, this wave over here can only be the beginning of a bigger corrective structure, and I'll talk about that in a second in the micro scenarios. First of all, let's look at what we had so far. Now as it stands, we had a nice 3-wave structure, right? We had a W wave, zigzag, then a 3-wave X, and then we had a flat in a wave Y, which is a 3-wave structure in an A, B, and then a wave C. However, this looks to be a WXY, mainly because if you want to see a wave C in an ABC expanding flat, you're looking for a 5-wave structure to the downside, but we never had a wave 4 and then another wave 5 to the downside, because if we're looking for a 5th wave to the downside, first of all, if this is the high of a wave 2, right, in a 1, 2, 3, 4, 5, first of all, this wave 4 is not allowed to close candles above the 0.5, but as you can see, the blue 0.5 over here, we closed many candles above the 0.5, so that makes this being a wave 4 extremely unlikely. And secondly, if you get a move like this to the downside on high volume, you want to see eventually another low made in a wave 5, of course respecting the rules of a wave 4, but another low made in a wave 5 on low volume. So a wave 3 usually has the highest amount of volume, and then wave 5, even though it makes then a lower low, it has less volume as well, which is then a sign of potentially an ending trend. So currently price made a 3-wave structure over here, more reminiscent for then a ABC zigzag structure, for then another corrective move over here. At least that's by the looks of it, because if we zoom in, we have to think also about the more bullish scenario, where this is then the end of a corrective structure and we can expect continuation, because remember the 236 has been hit, the key level we've been looking for has been hit, the wave Y target area has been hit, and the wave Y target area and the low that was made was also perfectly touched in between the 1 and the 1.618 Fib time, taken from the high to the low of W and then put it on X, which is very nice for a wave Y as well. So this looks to be a finished structure for potentially then upside. But if we then zoom in, and I do go to the 5-minute this time, which is usually a time frame I avoid on my Elliott Wave videos, as I like to stay above 15. But we have to always think now, is there a potential for an impulsive structure to the upside? Well, if that is the case, then this has to be a wave 1, and then this has to be some sort of a wave 2, right? Because we are then looking for continuation to the upside in bullish market structure. Now, does this look first of all as an impulse? If it is, then we're looking at a wave 1, 2, 3, 4, 5. two things I don't like. First of all, this wave 4 over here is very short in time compared to this much longer wave 2, while if we look at the theory of Elliott waves and time, it is much more likely that a wave 4 is longer in time compared to a wave 2. So that kind of goes against this impulsive structure. Secondly, usually wave 3 is the extended wave in an impulsive structure, but in this particular scenario, this wave over here, then labeled as a wave 1, is longer than wave 3, which is not a problem. You can have an extended wave 1, it's just more rare. Now, if we then look at the targets of this then being potentially, right, a 1, 2, 3, 4, 5. Now, of course, I explained the wave 4 problem here. But then if you want to know the targets for a wave 5, you pull a fib from the low to the high of 1 to the low of wave 2. And then you put it on what I then have the wave 5 extended wave 1 targets over here. And then wave 5 should end in between the 0.618 and the 0.786. Now on the 5 minute, you can see that this has not been respected, but on the 15, it has been respected. Now, the problem with the 15 is that you don't see the market structure, so it kind of invalidates the scenario. Like you can't even see a wave 4 on this. It more looks like a 3-wave instead of a 5-wave impulsive structure. So that's why this pool with the fib, yeah, it might look nice on the 15 minute, but it's not something that I would follow, because I want to see the structure when pulling these fibs, and then we close candles above the 0.786. So, right, it's not a very nice impulsive structure, which then leads us to think that the low is not yet in. Now, that doesn't mean that price has to tumble over to the downside. Yeah, we have a little bit of resistance right above where price is now. The daily naked point of control at 30.7K, not yet just touched, almost, but not yet. But it doesn't mean that price has to tumble towards the downside immediately, because we still have a potential scenario like this, which is an expanding flat. Now let me go to the 2-hour over here and then zoom in. For this then to be a 3-wave structure, right, which is finished in then a WXY scenario, but then one could be looking for another 3-wave structure to the upside, where then the most common target area for a wave B is between the 1.236 and the 1.38, which is between 31.9K and 32.2K. But what is most interesting is that the wave B target area is very close to the 2022 range highs for maybe a wick inside of this area, but still closing inside the target area of wave B, and then an impulsive move to the downside in wave C. So you expect a 3, 3, and then a 5-wave move to the downside, where then the target boxes that I mentioned earlier are going to be very relevant. Now, the only problem for this scenario can be time, because if we take the low time frame scenario and we are going to be thinking about an ABC, right, a structure like this, it will take a lot of time, and usually a wave 2 in an impulsive structure is a relatively quick wave. Most commonly it's a zigzag in a 5-3-5 wave structure, which is relatively short and deep, but as it stands now, this retracement is quite long. I mean, it is okay for a wave 2. It's not long at all for a wave 2. We didn't even pass the 1-to-1, but it is extremely shallow, which of course can also be very bullish, as the 236 has been hit. So if we do look for an expanding flat, make sure to observe the reaction we get at about 32K, because that is going to be an incredible important reaction that we get over there. Either we wick and move to the downside, or we potentially wick, range below, maybe start to build some bullish divergences for then continuation towards the upside. And of course, the most bullish scenario is just you're just going to go through and there's no reaction at all. But we don't know, right? We have to wait and see what price is going to do over here. But this is at least a scenario you have to keep in mind. Another scenario can be more like a WXY range structure, where in this particular scenario, it's again going to be a more complex structure, usually follows the path of a range, something like this over here, where you then have a WXY scenario, where then the target box over here is a very likely target area for then a wave Y, and then a WXY scenario target area for then a move to the upside, which can be a very interesting long area as well. Now, of course, you need your own plan, your own strategy, and whatever you do, right? No financial advice over here, but this target area can be very interesting depending on the price section that we're gonna get. Of course, these scenarios, it's a little bit like hypothetical, because we don't have too much information yet from this bounce to the upside, right? So we have to wait and see, but at least it's good to already start thinking in advance, like, hey, this might be a scenario, right? This might be a scenario. It's very interesting. And at the moment, probabilities are that this or the higher probabilities are that this move to the upside is not impulsive but corrective. And if this is a corrective structure, we expect a bit more downside to take at least these lows over here. And currently that is the highest probability that we are going to take these lows. But of course we could take the highs first before then taking the lows, something to keep in mind. Now the second scenario I have on the low time frame is I guess like not necessarily a more bullish scenario, it's just a little bit different, where this is the low of a wave 4 and then a WXY, which is finished, taking the key level of wave 4 over here very nicely, as a wave 4 of a higher degree tends to finish around the wave 4 price action of a lower degree, which has happened then in this scenario. But then you expect a wave 5 to the upside, which means this has to be the beginning of an impulse. And we just observed that currently the probabilities are not on the side of this being an impulsive structure towards the upside. However, you know, there's always a probability that this can be an impulse. Nothing is certainty in trading. Nothing is 100%. So if we do get a wave 5 to the upside, the most common target area for a wave 5 over here, the 1.618 and the 1.236, in perfect confluence with the 2022 range highs. For then again, a wick and continuation to the downside for a retracement, as this is then a finished 5-wave structure. And then you want to see either a wave 2, in this being a wave 1, 3 wave 2, and then a bigger 3, or this is the end of a wave C on the medium time frame and you go for lower prices. However, I explained in a recent video that if price is going to move towards these highs, the probabilities for continuation, eventually maybe in a 2 and then a big 3, or continuation immediately, increases by a lot. So if we go to 32K, the probabilities are very high. We're going to see continuation eventually without going down to 24K, leaving everyone behind that is trying to buy, because I've been reading it in some places, trying to buy around like the 20 to 23K level, and then they can FOMO in higher. That could be quite interesting, right? Now, if you then look at this as a range, one of the easiest strategies for some of the beginners that might be watching my videos over here, Elliott Waves is complex, right? Complex material, but some of the easiest strategies in trading can be very, very efficient. And I just want to show this. I'm not a range trader. I have another strategy that I personally developed myself over the years, but trading the range until it breaks. It can be as simple as that. And I just wanted to show you this volume profile over here that I've been observing actually over the days that we've been ranging over here. You can see how nicely it's being respected, right? We eventually started to make a structure to the downside, wick up of the range, down the range, up, middle, like, you know, potential take profit as at that moment in time. The point of control was over here. Then we move up, down of the range, and now we're at the high of the range. And each time, you know, you can have long, short. Make sure you have a good stop loss, of course, in place. You can build statistics about how far you need to put your stop loss for a certain win rate and everything. But yeah, it doesn't have to be that difficult, right? Of course, like 80% of trading is psychology, 20% of trading is your technical analysis, kinda. That's also something they say in the market, right? Now, finally, the CVD divergences. We had some bullish CVD divergences over here between the low, higher low in price, lower low on the CVD. The target is this high, which has been taken. CVD, it is magical. It is so good. You can see it over here. Move to the upside, move down, bullish CVD divergences. We had some structure to the upside, which is what I like to see as well. Not a straight line like over here, but we had some moves up and down, then a retracement, bullish divergences on both yellow, but for me more important was blue over here, for then a move to the upside where the target is the high in between the divergence lows, which has been taken very nicely. And now we wait and see what happens over here. If we go to the 5-minute, then what do we see? Do we see any divergences over here? I mean, one can argue, right? Lower high on price, higher high on the CVD on yellow, which is a bit of a bearish CVD where the target then would be this low. But then at the same time, price retraced. The yellow CVD moved to the downside quite impulsively, and now we have bullish divergences. So yeah, that's why on the 5-minute it changes so quickly. I prefer using CVD from the 15-minute and higher. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, which is the CVD. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.